Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Dropbox. Is Dropbox still a good company compared to its competitors like Microsoft or Google? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Dropbox is an online company that provides online file storage and sharing services. The company provides a Dropbox collaboration platform which enables users to create, access, organize, share, collaborate, and secure the content. Now, its Dropbox paper allow users to co-author content, tag others, assign tasks with due dates, embed and comment on files, tables, checklists, and other and code snippets in real time. In Dropbox, Smart Sync enables users to access their content on the computers without taking up storage space on their local hard drives. Its Dropbox Showcase enables users to present their work to clients and business partners through a web page. Now let's go ahead and look at some news of the company. Now, Dropbox quarterly sales topped $500 million for the first time. The company also beat expectations. Now, even though this was great news, the stock dropped about 2.8 to 3% today based on mixed reactions from several analysts. Now, the Dropbox said that 2020 was a transformative year for Dropbox, and I'm proud of the team for their resilience and focus in addressing our customers' evolving needs, said the chief executive, Drew Houston, in a statement. He also went on to say, we ended the year with a strong margin expansion, free cash flow, and more than $2 billion in annual recurring revenue as they continue to make progress towards their long-term financial targets. The company also announced a $1 billion share repurchase. In other news of the company, Dropbox is subleasing some of its office space to transition to remote working. Now, yesterday, Dropbox said that it would sublease some of its office spaces as the file hosting service transitions to a remote working model. The firm, which is a sprawling warehouse-styled office building in San Francisco, south of the Market neighborhood, is one of the many technology companies to make the work from home a permanent arrangement for some of its employees after the trend rose during coronavirus lockdowns, reducing the need for large offices. Now, Dropbox said as part of the virtual first strategy, we will retain a portion of our office space to be used for team collaboration, and a portion will be marketed for sublease. Now, let's go ahead and look at some of the fundamentals of the company. Now, the company currently has a market capitalization of around $9.8 billion, with the current stock price hovering at $23.69 a share. Now, the company had around $2 billion in total revenues for 2020. Now, the income for the fourth quarter was $118 million, which was 75% improvement over the fourth quarter of 2019, which was only $67.4 million. That ended the year with a $391 million in net income. It is important to note that Dropbox took a hit on its real estate of around $346 million. The company is currently shifting to remote work like we just spoke about, and will be subleasing some of its space. Now, that impairment charge was not part of its adjusted earnings. Now, the company is currently profitable, and earnings are forecasted to grow about 46.22% per year for the next 3 years. The projected revenue for 2023 should be around $2.41 billion, and after-tax earnings should be around $555 million, a significant increase from today. Now, they are in a good financial position because they are debt-free, and shareholders have not been meaningfully diluted in the past year or recently listed. Dropbox short-term assets do exceed both its short-term and long-term liabilities. Let me bring it back over here. So what do the analysts say about this? Now, the analyst consensus, it's a buy, with 36% saying it's a strong buy, 36% saying it's a buy, 18% of them are a hold, and 8% sell a sell. Now, the average Dropbox stock price target is $28.88 over the next 12 months, with a high estimate of $37 and a low estimate of $22. Now, going over a few of the analyst reports now, well, Citigroup rates the stock as a buy with a price target of 30. Now, they said that Dropbox may remain out of favor as investors now prefer growth names in the sector, Citi analysts wrote, according to Bloomberg. But optimism for the company will emerge if it matches its earnings guidance this year, they said. William Barr rates the San Francisco company outperform. The firm notes that Dropbox's revenue estimate lagged analyst forecasts It's trying to grow both revenue and profit, which may be difficult, Blair said, according to Bloomberg. Now, the burden of proof is on Dropbox management to convince skeptical investors that it can do so. Now, Jefferies has a buy rating and a $28 price target as well. It said that the stock is trading at a discount to its competitors, and I do agree that it is definitely trading at a discount. Dropbox can deliver more leverage than guided on it's based on their historical precedents, the investment firm said. Dropbox sales forecast looks conservative, Jefferies analyst said. Now, RBC Capital Markets raised its price target from $28 to $28 from $25 and has a outperform rating. Dropbox reported a solid beat on revenue and a strong one on margin, RBC analyst wrote, according to Bloomberg. Average revenue per user continues to show strength, even though net user additions are slightly decelerating, they said. Now let's look at the valuation analysis right now. The most appropriate valuation measure for Dropbox is the price to sales ratio. The price to book ratio is excluded since it most likely underestimates the company's book value by overlooking hidden assets such as its intellectual property. While the PE and the PEG ratios are not meaningful, therefore Dropbox seems fairly valued with a price to sales ratio of 4.99 times. That is in line with the software industry median of 7.4x times, slightly below it. And with this financial strength analysis, the debt to capital ratio is 44.83%, is in line with the software industry's norm despite its increase over the last year. The company should be able to comfortably repay debt given its interest coverage of around 62 times, I'm sorry. So my buy, hold, or sell recommendation on Dropbox, well, here are my thoughts on this. Now, the company itself, let's look at it historically. Now, the company started as a simple cloud storage tool. Competitors like Google and Microsoft made this service in particular a commodity, so Dropbox had to switch gears a little bit and offer Dropbox Business. That is a subscription service that offers tools to manage documents, projects, and collaboration in a central hub. So the strategy was to switch from a storage to a workflow, which I think is key for the company's growth in the next couple of years. The company then released Dropbox Services, which helped employees collaborate together from a decentralized work environment, which we know now, almost post-COVID world, working remotely is key for future. Then the company integrated a HelloSign, which is a direct competitor to DocuSign for its Dropbox subscribers. This keeps users within the Dropbox ecosystem and upselling them. So looking at the paying users on the platform, the company increased 8% in paying users versus a year prior. With its 600 million registered user base, it is a formidable force to be reckoned with. Now, Dropbox does benefit from a sticky user base, and I feel that it will likely continue to grow paid users while upselling existing users in the future to come. Now, that you have to also look at the downside risks to Dropbox, because those are the positives. Now, what are the negatives? Now, there may be many competitors, like, for instance, Microsoft Teams bundle or Google. Now, this is definitely a big concern for people with Dropbox, because the potential for users to churn to competitors like Google and Microsoft, big tech giants that can easily undercut them on price. I feel that a steady march up in customer count should continue to alleviate these concerns in the future. So I would say if you buy into this, you definitely look at the user count. And if you see anything start dropping over the years to come, then you might want to switch to Google or Microsoft. As well as investors should track Dropbox's average revenue per user, which is a good indicator of the company's pricing power. Now, last quarter, Dropbox's average revenue per user was $128.03 a year, up from $123.15 a year ago. As long as Dropbox integrates new products onto its platform like HelloSign, Dropbox Spaces 2.0, where users have a virtual workspace and a work from home environment, is what I think is the key catalyst to win customers in the post-COVID world. Now, looking at the company going virtual remote work, it's important to note that the company had over $1 billion in total lease liabilities, which include assets, not just office space. When the company repurposes this office space with subleases, the cost savings, I feel, will definitely help the profit margins in the long term over the next couple years. Fundamentals are solid with this company. User base is growing. The main question you as an investor should think about is whether Dropbox can win new customers over its competitors of, let's say, Microsoft and Google. My recommendation is that I'm a long-term bull on Dropbox, and I do target a price of around $30 a share over the next 12 months. And right now with a dip of 3%, it might be a good time to buy in. I would also check out Google and Microsoft for your portfolio as well to have a balance of the three. So there you have it, folks. As always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.